3 months on from filing for Chapter 11 protection, U.S. Telecom's network Global Crossing has announced an $8 billion write-down. But what about promises to streamline and cut costs? John Legere is the CEO of Global Crossing. We welcome him to Squawk Box. And you're in Europe, which is interesting. Just tell us what you've been doing in Europe for the time being.
Well, it's important to note that Europe's a very significant part of our global asset and our strategy. You may not know, right here in the UK, we actually have 8,500 kilometers of an IP network, the second biggest to British Telecom, actually bigger than cable and wireless, and we connect to about 85% of the business customers. You may also not know that the transmission of this feed from London to New York is going over our network. So all of Europe is connected by our capabilities. What I'm here to do is tell our customers, tell our employees that we're well through this process of restructuring the company, and we're going to come out better than ever. And I'm giving as much detail as they want. So Europe's key.
What will Global Crossing look like at the end of this? I mean, obviously you're selling operations in various parts of the world here as part of the restructuring program that is ongoing. What will we see emerge at the end of this from Global Crossing?
We're in the middle of the process of looking at potential investors in the company. What we have is over 60 interested parties and a series of dates coming up where the banks and the creditors in the court are going to look at these bids. What the key dates here is May 21st. That's where Hutchison Whampoa and Singapore Technologies have till that date to come to definitive documentation to become the stalking horse. All bids are due by June 20th. If necessary, there'll be an auction on July 8th, and the court will rule on the 11th. Most of the interested parties are looking at the whole company, because it's important to note, before we entered Chapter 11 proceedings in the U.S., not here in Europe, we completed our project. So over 221 cities in the world are completed with our IP infrastructure. We have 85,000 customers and recurring services revenue of over $3 billion. I think you're going to see that asset and that global reach emerge with a totally different cost structure and a very, very efficient organization.
Guy, come on in.
Good morning, sir. Why do you think that the new business model is going to work when the last one so clearly didn't? A lot of the alternative carriers, such as yourself, were built up on the expectation of very strong and ongoing growth to feed into the debt. Why do you think the new model will work when there's still so much capacity out there right now?
Well, it's important to note that about 95% of the issue that Global Crossing had was a telecommunications correction. And the next generation carriers were building on the promise that the world will move to a suite of converged IP services. That move will still take place. We did finish our process. We have built the global network. So it wasn't necessarily a flaw of our business model. It was a timing and a phasing of a significant one planet, one network infrastructure build that we did complete. We were very laden with debt, but that's not new to anybody in telecom in the world or here in Europe. And we now have a process where by the end of this year, we will be EBITDA and cash positive with our company. We're going to take that out of Chapter 11 with that same asset and reach, and I think we're going to be a significant part of the consolidation of this industry and its restructuring around the world.
Clearly, you may have an advantage here. Chapter 11 and the process that you are allowed to go through in the United States is much more forgiving than the processes that exist over here in Europe. Many of the carriers over here continue to have problems. You say that that will give you, that you believe you're going to play a major part. Is that, to a certain extent, due to the fact that Chapter 11 offers you so many more opportunities, do you think?
Well, actually, our process is probably amongst the most complex in the world. Remember that we filed our entities in the U.S. and in Bermuda, but we have significant entities throughout Europe, throughout Latin America, that we need to continue through this process to keep solvent, to make sure the cash is flowing, to keep our payables current. And that complicated process around them was not too dissimilar from many companies in the world. But yes, there will be a significant restructuring, and the debt level of our company will go down significantly, assuming that our banks and creditors like the process of seeing the company move forward and riding the upside, which I believe they will.
What litigation risk remains out there for you? I mean, I see you've sued Level 3. This is an ongoing dispute that you have with this company about various assets. Shareholders, private individuals out there are aggrieved about what's happened at Global Crossing. The fourth largest bankruptcy in the United States. There are a lot of angry people that want to crucify this company and anybody that worked for it at the time. And you came out of the Asian division, so in a sense, you're not exactly spot clean, I think, as far as investors are concerned, if you'll pardon me for saying so.
No problem. Now, I became the CEO in October of last year, and since then we've been going through a significant restructuring in this company. I actually believe one of the most successful restructurings that is not quite understood. Now, believe me, in any kind of restructuring, including or not including a bankruptcy, people are hurt, jobs are lost, people lose money, and we're extremely sympathetic to that, and it's very natural for people to feel that way. Now, importantly though, we're protecting jobs. We're protecting an asset that has changed nations around the world, and we're trying to get to a situation where we can grow jobs and return some of the benefits that were promised. As far as outstanding issues, we continue a process with the Securities and Exchange Commission in the United States. It's going well. We believe that will run its course, and any actions we need to take to make corrective measures, we will. And outside of that, the issues with shareholders, they'll run their course. We're very sympathetic to them, but we believe the best thing to do is to restructure this company, grow jobs in the future, and bring the promise of IP services to the world as we set out to.
Will the company go after previous members of the management team that are perceived to have perhaps done things incorrectly at the time that Global Crossing was starting to unravel as a business? I mean, Gary Winnick has been fingered by many people who've said he sold shares all the way through 2001, perhaps knowing that there were problems. I mean, I don't want to throw allegations around, and he was within his rights to do so if you dot the I's and cross the T's as far as the legislation is concerned, but it didn't look good. And that's been the problem. We've sat here in Europe and watched what's gone on in Enron, and this whole issue of capitalism, business in the United States smelling bad, has undermined the trust of the investment community. Are you as a company going to go after some of those people?
A couple of things. First of all, there's always a positive and a negative, and let's give Gary Winnick some due. He was an entrepreneur that changed the entire subsea industry at a time when people thought the idea was crazy. Now, most of the issues and allegations, time has shown, are industry questions, questions of accounting, questions of an industry in revolutionary change. Whatever comes out of these various investigations, and 95% of them are not personal, these are company and accounting issues, but obviously if somebody did something wrong, action will be taken. Now, we also have to continue to remember telecommunications in general, and we're not immune to it here in Europe. If you look at NTL, KPN Quest, Energist, Marconi, the industry's going through a correction. And it may be a little presumptuous to look at the other side of this. We're making the changes almost to give us a first mover advantage in the kind of restructuring that everyone's going to need to go. And anybody with the kind of debt that is on the balance sheet of these companies, anybody with the old legacy networks who's not prepared for the next generation, a year from now we're going to be having a very different discussion about a Global Crossing in a different position, being the aggressor in these processes. But changes, if they need to be taken, I've committed, and my board is committed, we'll do whatever we need to clean the name of this company.
What changes are you going to make?
Well, first of all, we've made the big changes, which is in the year 2001, the operating expense levels of this company were planned to be about $2.2 billion. By the end of this year, they'll be at a run rate of $720 million. The capital expenditures the last several years ran in the $4 billion range. There'll be $200 million this year. So we're taking the business and we're making it generate cash and EBITDA, living on the means that we have, not waiting for huge amounts of cash flow to come up front. Services revenue, focus on the business, downsize the organization to be an efficient and lean, focused organization. Those are the key changes. We've also asked our board to do an independent investigation of all the issues that are being looked at outside, and whatever they find, we'll take whatever changes we need. But the restructuring is well underway. This company is going to emerge from Chapter 11 and be a power in the industry.
Just to come back to the industry environment, and you touched on it a bit with Guy here. You've named 2 or 3 businesses already that are in the space that have got real problems right now, and anybody that is watching this show who's been burnt by technology is going to be very reluctant to buy another share in any company that's attached to the telecoms brand. What do you think the overcapacity situation is, and why are you convinced that you can continue to run a sound business, and that the business will come back? Because at the moment it's very hard to see the demand.
Yeah, and there's when we talk about demand or supply and demand, there's 2 basic components in telecommunications. There's a wholesale layer, there's a capacity and an infrastructure layer, then there's an advanced services layer. That top piece will change as technology changes. It's not necessarily a supply supply question. It's a technology question. So question number one is, when will converged IP services migrate? Second, though, at a supply of infrastructure layer, in 1999, in the year 2000, huge amounts of capital came into this industry with the promise of building supply. Because of that, prices came down 40 to 50%, and demand slowed down. It didn't go away. What really happened, though, in the year 2001, most of those projects were canceled. If you take a new, renewed look at supply, it's not there. There really was a waiting for huge supply, and I think what you're going to see is we can't build businesses expecting it to come back next quarter. But you go out a year, you go out 18 months, you're going to find out there is a rational supply level. There will be 15 to 20% price declines, and those that have finished their projects are going to be successful. So the same people that came into tech with a promise have been hurt. Things are going to come around, and it's the same promise, it's just time delayed.
Mr. Legere, thanks very much for coming in. We wish you well in your efforts to turn the business around. John Legere joining us from Global Crossing.